What's up guys, Bill here. Welcome back to another watch list walkthrough. Today I'm going to review some trades I took on SPY, Intel, and OXY. Let's start with SPY. We came into this week knowing it's a holiday shortened week, just a 4-day week with Labor Day yesterday. And oftentimes when you come into these weeks, you're going to experience a little bit of low volume, limited range chop that first day back especially, and that's what we got today. So I came into the day knowing I was going to need to pay special attention to two things. One, the opening range, and two, just watching the legs of price action and using my intraday fibs, because we want to try to avoid trying to chase breakouts or breakdowns, things that require a lot of sustained moves and volume from market participants when they're not there, right? So the best plays today for me, and probably for most people, ignoring maybe some super hot or super cold stocks that just dumped or ripped all day, are going to be those fib retracements, right? So here we have SPY. First three candles just kind of flushing, right? Showing some weakness. And establishing that 15-minute opening range on this third candle, these orange lines. And at this point, I'm waiting for one of two things. I want to see some high time frame closes under, retested fails to show me that maybe the market is so weak that we can actually play it for continued downside. Or I'm going to be drawing my first intraday fib of the day and waiting for the retracement. So, maybe you draw it here, but you see that it doesn't quite retrace back up high enough. We're not even to the golden zone, right? We kind of wicked off the 382 and that 450 GEX, but then we made another low later on, and you can draw that fib there, and that's where I drew that fib. We got a nice bounce here from this pre-market wick, which often on Webull is great. They kind of show you, these are dark pool prints usually, and oftentimes there'll be support or resistance that day. So anyway, here's my first major intraday fib when we start to retrace. So now, because the early morning price action had kind of established some weakness and a downward movement, I'm looking to take puts on a 618 test. You can see here that the gap between the 618 and 786 is only about 30 cents. That's pretty small. So I'm going to enter on the touch, right? So I'm entering here. I'm eating a little bit of a drawdown, and then we get a nice flush. And I played 1-day expiration contracts, and they went a little over 50%. Just a really nice smooth move after that initial pump through the 618. And that's how you want to start your day on a trade like that. And these 618s, they're always great. On trend days, you just don't get them. But they're pretty much great, in other all conditions. Choppiness, limited range. Sometimes you got to be careful if it's really tight, But at this point in the day, we had got some moves outside of the opening range, and I was looking to short based on the early morning candles. The great thing about these is you can flip them and then play the other side later on in the day. So you can see that after this dump, eventually we start to move up, and my runners get stopped out, break even back up there. And now we've kind of established a leg up. So I'm going to draw a fib on the leg up. And we get up here to the opening range high in all these wicks, right? Now, you could play the range as well, guys. This is why this is when I mentioned there would be two things I'd be watching coming into the day, the opening range and the fibs, right? Look at all these wicks up at your opening range high, all right? We see in pre-market high, we've established that there's some resistance at the previous day's closing price. That is that line right there. And as soon as we get to the top of the opening range, we've spanned this whole range again. Wicks up, wicks up, wicks up. Totally acceptable time to go short, in my opinion. And you get a nice little, dollar move down. Very limited range today. So these moves, they look great. The candles look great, but they're only $1. Instead of me shorting up here, I was actually waiting and using the fib. I wanted to go long on a 618 pull down. And that's what I did here. Again, the the distance between the 618 and 786, which helps me with my risk because a close under the 786 is my stop out. It's small again, right? It's 32 cents. So I'm in on the touch. And this one just barely wicks below, and then you get a nice move up. Just scalpable moves, small wins. There's not a whole lot of range in the market today. You're not going to get huge wins. But that's pretty much how I played SPY. And after that, and I took my profits, and my runners got stopped out again. This was chop, and I was already over the day, honestly. Like, there's going to be better days to trade than in these conditions, and I didn't need to force anything. I had a couple wins under my belt. We'll talk about some other trades I took too in a minute, and I was having a good day. So at this point, I basically just walked away from the screen. I set my break-even stop on my runners, check it on the phone every once in a while, see if I need to scale out more or if I've got stopped out, and that's it. Don't waste all your energy sitting in front of the screen all day, draining your mental capital on conditions that are just not conducive to big moves and big days, right? Take a break, walk away, or get your prep started for the next day. Let's talk about a couple other trades I took and how the fibs would help with these as well, all right? So Intel, I was bullish on Intel coming into the day, and it was strong right off the open, okay? So I don't do a ton of trading right off the open anymore. I usually wait at least 15 minutes. There's certain scenarios where I will take trades really soon off the open. Could have had one today on OXY. We'll talk about that next. But anyway, we just ripped straight up here for a couple of candles, established the opening range. And what do you think I did? I saw that we had relative strength in Intel. I drew my fib. Pullback right to the 618. I'm in here, a little bit of a wick, and then just a 4-candle move all the way to make new highs a day, right? Easy win. Wasn't getting greedy. You know, I scaled some at the 37 positive GEX resistance, scaled some at opening range high in this little area here, which is a daily pivot level, and then just, you know, taking profits when I'm happy, right? Set some break-even stops on your runners, and eventually they stop out all the way back there. But just an easy trade, guys. You don't have to guess right. Like, you don't have to grab Intel right off the open, right? Because you never know. Like, as much as you chart, as much conviction as you could possibly have on a stock, the open is so random sometimes and so volatile that you're just making it harder to make profits. It's not as reliable, right? But these fibs are reliable, and you can backtest them. And we know how well they work. And so we just pull back nice and easy to the 618, barely get any drawdown, and then a smooth win. Just low stress. That's what we want. Let's talk about OXY as well. Now, OXY is a play that I could have took off the open, and I was looking to, but it just didn't quite do what I wanted. So the big thing with OXY is it's an inside week setup. And if you follow me on Twitter, you'll know that I like the inside weeks, and I posted about this yesterday and the previous week, and all the inside weeks from the previous week broke out and were awesome plays. So hopefully we'll see some more of that this week as well. You can see here, inside week, this candle completely inside this candle. Now look what happened here today. We gapped right over the previous week's high. That's your trigger, all right? But we're gapping over this level. And not only that level, but other levels that you can see are kind of important. Like if you look at 65, on OXY, resistance, going back here. It'll get over it for a couple days and fail. Resistance, right? So it's gapping over. Not only is it an inside week gapping over its trigger, but it's gapping over resistance that's been tested numerous times on the daily. This is a gap and go setup, right? And I was watching it off the open, but what I had told myself was just test 65 for me and I'm in. But as you can see, it came 13 cents away. And was I being too picky? In hindsight, it's easy to say yes. But I do like to have a plan, even if it's an off the open trade, and say, all right, just touch 65 and I'll jump in, you know? But it didn't. And it just ripped right up. And that's okay, because look what we can do. The same thing that we did with Intel. Watch those first couple candles, draw a fib, you see the strength, wick to the 618, and you're in. Now, this play doesn't rip after the 618. A lot of times you get a nice bounce off these 618s, and you can get mostly out of the trade for a lot of profit, but this one starts to flag, and that's fine. Just be patient, all right? It comes within no chance of stopping you out. You got in way down here, just a nice flag, and you can pull up the EMAs, and you can see that they're mostly respecting it. You know, it does start to lose the 9 a little bit as it continues to flag, but that 20 still there, doesn't even touch it. And then we get the breakout. And what else can you watch? Watch your opening ranges. We flag under it forever, but then look at the first time we close even a 5-minute, and I like to usually wait for a 10. As soon as we close on the 5, boom, gone, right? Little dip below, boom, gone. Easy. So even if you didn't jump in right away with as great of a setup it was, and I wish I would have jumped in because calls, you know, on this candle went 100% within a few minutes. But you could still play this nice consolidation, relative strength. You know, the market was kind of all over the place, but OXY just kind of stood its ground. Very stoic here in this flag. And then you could play that opening range breakout if you wanted to, off the relative strength. Showed you the fib, you could play that. So it's important when you come into certain days, and this is something that you just pick up the longer you trade, the more you're in front of the screens, kind of being aware of what kind of conditions in the market you can expect based on certain things, whether it's this week, it's a shortened week after a holiday. Sometimes you're coming in to a week where in the middle of the week, there's major data that's going to drop, like CPI or FOMC. A lot of times those days running up to it are kind of choppy, kind of limited range. People are waiting. They're sitting back and they're not being aggressive. And that leads to the market not making aggressive moves. All right. So coming into those types of situations, you want to make sure that you're giving yourself the best chance to succeed by playing setups and playing styles of trades that line up with that environment. Because no matter how great a setup is, how great a chart looks, if the environment doesn't match, it can really, you know, quickly invalidate your setup or cause it to just be like, feel like you're pounding your head against the wall. Like, man, this setup should totally be moving, but it's not. You get frustrated, right? And then that frustration can lead to doing things you know you shouldn't. Oversizing, averaging down, you know, all these types of things that can get us in a lot of trouble, guys. So hopefully that helps today. If you have any questions, just reach out to me either in the comments or on Twitter, DMs, comments, anything like that, and I'll help you out.